A typical losing trader learns about chart patterns and goes on to trade every single chart pattern. He loses money, gives up, and concludes that it doesn't work. Well, it's not that it doesn't work, it's just a lack of perspective about when chart patterns work and when they don't work. Did you know that there are times where you shouldn't be trading a chart pattern? Well, if you are watching this video, I'm guessing that you know what a head and shoulders pattern or a double top pattern is. These are chart patterns, and you find it all over the internet, showing you how to trade chart patterns. But there's something wrong with most trading videos out there. They cherry pick a chart that shows a head and shoulders pattern and show you that by trading the neckline, you will make money. Now, if you've been trading for some time, you will know that it doesn't work. And if you haven't, this video will save you the heartache of losing money and figuring out on your own. So in this video, I will go through 3 specific scenarios where you should not trade chart patterns. The third scenario is a concept that I've never touched upon in this channel ever before, so make sure to stick around till the end to find out what it is. Before I move straight into the first scenario, please hit that thumbs up button and subscribe to the channel if you're new. It helps support this channel and I would really appreciate it if you could do me that small favor. We also want to encourage you to pay close attention and not miss out on any important information. And that is why we do a giveaway worth $37 for our plug and trade trading package. So if you wish to participate, then look for an emoji somewhere in this video. As always, you can find the full instruction in the pinned comment down below as well. So earlier on, I explained that you shouldn't be blindly trading every single chart pattern. The first scenario where we should avoid trading them is when it's against the price action context. Let me illustrate this to you through an example. So right here we have a clear uptrend. So let's be really logical about this. Which will have a higher probability of working out, buying or selling? Well, unless you want to be a hero instead of making money, then your answer should be to buy. And that would automatically mean that you will avoid trading double top patterns or head and shoulders pattern. Why? Well, that's because these are reversal patterns. Now, don't get me wrong, there's a time and place for reversal patterns. At a strong key support or resistance level, it might work. But as I mentioned at the start of this video, most people have no perspective on when is the right time to do this. So if you have no perspective or experience in identifying key levels, then it's better to stick with the trend because picking market tops and bottoms is a tough job. But hey, that's okay because you don't need to be able to pick market tops and bottoms to make money. You just need to learn how to follow the trend. So never trade against the price action context. When you are in doubt, skip the chart pattern or lean towards the obvious setups, such as a setup like this where the price is in a downtrend and we get a nice double top pattern right here. These are the kind of setups that you want to lean towards, the clear ones. Moving on to the second scenario where you want to avoid trading chart patterns. It is trading a chart pattern that goes against the higher time frame. This builds on the first scenario because technically price action context should encompass the higher time frame. But because this is so important and I see many traders make this mistake, I have decided to include this and provide you with more information and examples. So right here we have a left shoulder, the head and right shoulder on the higher time frame in the daily chart. This is an inverted head and shoulders pattern that hints that the market is transitioning from a bearish trend to a bullish one. But if we were to go into the lower time frame, we see a double top pattern at the right shoulder over here. What do you think? Do you think that we should trade this chart pattern? Do you think that it is high probability? Well, it shouldn't take a genius to know that it isn't high probability. As a general rule of thumb, always remember that the higher time frame trumps the lower time frame. So if you see a chart pattern on the higher time frame and a chart pattern on a lower time frame, then lean towards the higher time frame. And of course, if you see higher time frame resistance and a lower time frame support, then lean towards the higher time frame resistance. Remember that the higher time frame is always stronger, whether it's chart patterns, trend, or support and resistance level, and that's because it's established for a more extended period. Think of it as going to a restaurant that serves amazing food for the past 20 years versus that of a new restaurant that has just opened. Now, there's a slight chance that the new restaurant is going to be better, but on balance, you are better off sticking to the restaurant that has been well established. This same concept applies to trading. So let's move on to the final scenario, which I've never covered before on this channel. It might not be the easiest thing to understand right off the bat, so I will do my best, but feel free to rewatch it if it isn't clear. This last scenario you want to avoid is chart patterns that use diagonal lines rather than horizontal lines. So I'm referring to chart patterns like a wedge, flag, pennant. Basically any chart pattern that uses lines sloped at an angle and not horizontal. This is a double bottom chart pattern and you can see that the lines drawn are horizontal. This is a head and shoulders pattern. In an ideal case, the left shoulder is symmetrical to the right shoulder and the neckline is also a horizontal level. But this is how a bull flag looks like. It consists of two downward sloping trend lines. Now here's why you want to avoid trading these kind of chart patterns, especially if you are a beginner who is still struggling. Because these are not horizontal lines, you're going to need to be very careful with how you draw your diagonal lines. On hindsight, a flat pattern looks perfect, except that in real time, when you are watching price unfold, you may draw the diagonal lines wrongly. And mind you, just by drawing it a little off could mean the difference between having a valid entry versus waiting. If you draw it like this, you would have lost money because you drew it wrongly. And if you draw it correctly like this, then you would have caught the move and made money. Can you see how a small change will affect your analysis? So you need to be accurate in how you draw when it comes to chart patterns that use diagonal levels. And drawing them accurately is a function of experience that takes time. So this is the reason why I do not recommend trading chart patterns that use diagonal lines, except for maybe the ascending and descending triangle, which I talk a lot about on this channel. And that's because in an ascending or descending triangle, we are not trading off the trend line, but rather waiting for the price to break the horizontal support or resistance level. So again, it's still better to lean towards chart patterns that use horizontal lines, especially if you are still a struggling trader. Now, because the ascending and descending triangle is a very powerful chart pattern that I highly recommend for beginners, I'm going to leave the link to the video that teaches you how to trade them at the top right corner and at the end screen of this video. If there is one chart pattern that I must choose to trade, it would be the ascending and descending triangle. I'm sure you will understand why after watching that video. So summing up, I went over 3 scenarios where you shouldn't trade chart patterns. The first is when the chart pattern is against the price action context, like selling a double top when the trend is clearly up. The second is a chart pattern that goes against the higher time frame, such as selling a double top at the right shoulder of the higher time frame. Finally, you want to avoid trading chart patterns that use diagonal lines because you'll need to be very accurate to make them work. That's it for this video. I hope you got value. Please hit that subscribe button and turn on the notification bell so that you won't miss out on any of the future videos that I upload. Thanks for watching. As promised, here's the link to the video on a step-by-step guide to trading ascending and descending triangles. I will see you in the next one.